We always start with upvote, downvote. Typically individual names. Of course, they're not endorsements, they're not recommendations, but thought it'd be fun today, Jenny, to look back at the year and kind of narrow this into more thematic type of conversations and look back at some of the investing and trading themes of 2022, keeping it somewhat high level. Of course, we'll look at some charts as well, but the very first one that stuck out to us, and I think this is a very interesting one, is the dynamics of retail. You mentioned kind of this move away to a post-pandemic world that saw so much disruption within this space. You saw a flock towards e-commerce. You saw consumer staples being hoarded during the pandemic, and all of that kind of normalized, and things got back to normal to some degree in 2022. But what did that mean for retail?
Right, and I think retail, it's hard to pinpoint a space that has been hit the hardest by the pandemic. Of course, it was sort of like every space was hit, but retail was one where we saw a lot of post-pandemic themes. Some of them Alex just pointed out. Another huge one to point out is the federal stimulus that flooded the market. This year we saw much more difficult comps, and we also saw a lack of funds that then weighed on the consumer. And I think it's been a very important conversation finding safety in some of these staples versus some of these discretionary stocks, which is a theme we've seen in the outperformance of names that do have more grocery-esque offerings like a Walmart or a Kroger versus a name like a Target. Now, retail sales in November pegged their weakest performance in nearly a year. And a lot of this we're seeing is the fact that consumers are now forced to be more conservative with their spending. This has only escalated all year long. U.S. consumer strength has pretty consistently fallen throughout the year, as consumer spending is also a major driver of the overall economy. So now heading into this new year, there is this grand thought that we are destined for a recession. Of course, we cannot be predictive of that, Alex, but consumer spending is definitely one concern on economists' mind here. The last 2 months of this year, I also want to point out, oftentimes do account for about 20% of total retail sales for the entire year. So it has been a very important past few months for the retail space. While consumer sales are likely to continue at this same pace per a lot of the street analysts, we are expected to see a lot of these retailers' top and bottom lines suffer now into the fourth quarter and into this new year. Also want to point out just the fact that we have still seen areas of strength. I pointed out the way we've seen outperformance in some of these consumer staples like a Kroger, which also did announce or is seeking at least a merger to form the largest grocery chain in the country with Albertsons. So there has been still positivity here, but difficult to see a name like Amazon, a powerhouse, fall as steadily as it has throughout 2022.
This is an upvoted theme for one primary reason, Jenny. One is it has so many kind of underlying stories within it, but we're almost 5 minutes in and we haven't even said the key word of 2022 because it's become such an embedded theme that we just are familiar with it now. It's inflation. Nowhere is this more expressed than in retail, and it shows that dichotomy between discretionary and staples. I'm looking forward to discussing this one more with Rick. Next one on our list here is online advertisers. And on the surface, it might be difficult to kind of pinpoint names to what we mean by that, Jenny, but I think once you really start thinking about it, it makes sense as to why these names are lumped together. You got names like Alphabet, to Meta, to Pinterest, to even Snapchat tied into this name, and a ton has gone on in all different shapes and sizes, all different types of companies.
And I think a lot of to blame is on privacy, which is perhaps a win for us as consumers. It's not so much a win for a lot of these companies that are trying to win over ad dollars. As we know, Apple's iOS app tracking update has limited developers, thus limiting their appeal to advertisers. We did also get the EU's general data protection regulation rolling back some of these cookie offerings. So we as consumers now are more protected than ever. This has not been good news. As you can see there, Alphabet's third quarter YouTube ad revenue slid 2%. Once a behemoth of growth is now seeing some weakness. The online video marketing space is actually one that has accelerated in the last several months of this year, but that has thus now changed the way we advertise. Online and TV companies are now competing for the same portion of the pie, making competition stiff. You also have a new player, TikTok, which I think is important to mention, that is also stealing some of these heavily sought after ad dollars. Now, Meta Platforms and Amazon both did announce significant layoffs in the last several months of this year, showing the fact that these companies are taking a pretty sizable hit. It's actually estimated that Apple's privacy changes have cost a name like Meta more than $10 billion in lost revenue since they unveiled that iOS update. So this is a major story in looking at not only social media companies, but also a behemoth like an Alphabet or even an Apple.
And this is an emerging industry, as crazy as that is to say, and we're still watching these changes unfold in real time. Meta Platforms formerly known as Facebook, has been such a strong performer over the years, a cash cow, trying to do things, to innovate, to continue to be on the cutting edge, and has been punished for that in the same way. You talked about the TikTok effect, TikTok being the new big thing within this space, getting those eyeballs off of things like YouTube, getting eyeballs off of things like Instagram and Snap and Pinterest. But at the same time, you talked about this normalization and post-pandemic world. Maybe there's a little bit just less screen time in general impacting some of these names. But when marketing budgets start to get cut, as we've seen with many of the different business conditions of 2022, some of these are those first places that they go. Places like Snapchat may be seeing some of their digital advertising dollars cut as a result. So a huge theme, one that's still unfolding, I would say, Jenny, in real time. But I'm going to say downvote because you gotta pick some, you gotta not pick the others. So we'll say downvote for this particular story, but anything that contains Alphabet and Meta easily could be one of the biggest themes every single year. The next one, though, equally big and kind of tied to this space, I would say, is this continued disruption of traditional entertainment through streaming. Netflix, a huge story.
And I was going to say, this is actually a great segue from online advertisement as one of these stories of Netflix this year. And I also say Disney is the fact that Netflix launched, of course, their ad-supported tier. And they sort of redid the way their pricing structure worked to try to eliminate those who were using others' accounts or those who were perhaps not paying but still able to access Netflix. They also have now a lower price tier with, of course, advertisements. So attracting all different price ranges. Disney Plus also now offering an ad-supported tier. So it is very interesting to see the fact that we're just talking about how the ad space is running out of money, yet some of these streaming companies are pushing into the ad space because we're not able to see the same levels of growth in both Disney as well as Netflix. Netflix, Alex, we've consistently said all year long, has been one of the largest stories of volatility, given its slides after its first and second quarter earnings. Then we saw some normalization as perhaps the market reassessed its position on Netflix. But the market has been, I think, also very hard on Netflix this year. It is normal to see some of these streaming trends become more what they were back in 2019 per se, because we are not spending as much time at home. We are not streaming for hours and hours and hours a day. But we also saw Warner Brothers Discovery launching their Max service in this new year. That is still expected. Amazon did debut exclusive Thursday Night Football rights, which is a positive. Definitely, if you already subscribe to Amazon Prime Video, it is relatively included in that subscription, which is amazing. But this is a space that only continues to get more crowded and only continues to get more competitive throughout the year, Alex.
Yeah, it's hard to overlook Netflix this year, and almost no name does a better job of just highlighting the volatility that we saw in 2022. I mean, it's almost been a tale of 2 years for Netflix as well, just completely collapsing in the first half of the year. You can see that represented there on that chart. And this slow build back to still very depressed prices over this second half of this year. But really, two really disappointing earnings results early in the year were met with some optimism around this launch of the ad-supported tier for Netflix. But I think this also highlights, as you talked about, the entrance of new competitors and this increasingly crowded space. To me, another huge theme, and it was mentioned there, I think, with the Amazon and its foray into the NFL with its Thursday Night Football rights, is Apple and Amazon they're not only just streamers. It seems like they're in every single one of these themes, but they continue to make pushes into more and more spaces. So, Jenny, I mean, I can't even believe I'm saying downvote for streaming because it's been such a huge part of this year and our conversations here on Next Gen. But there is at least one more on this list that I think is more deserving.
Okay, I was actually strangely enough excited to talk energy because energy is something we oftentimes will look at some of these outperformers on the year, Occidental Petroleum being one. But there are two major catalysts I think worth noting that affected energy's year. Of course, one being the fact that we are coming off of the pandemic. We are seeing the fact that heightened oil and gas is a result of what we saw was that commodity demand was absolutely crushed during 2020 as well as 2021. It has been one of the most unique and odd years for commodities that I can remember in my brief time, Alex. So I think that's why it's such an important conversation. Another huge catalyst, which I think impacts, again, the overall market, is the fact that we saw Russia invade Ukraine back in February, with Europe banning the import of most Russian oil, and how that has trickled down into not only the energy market, but so many other areas that we discussed throughout the macro economy. These were two major stories and major catalysts of the year, and it's important to keep in mind that happened only about a year ago. It feels like that was, to me, a lifetime ago. So for that reason, we have seen outperformance in this energy space throughout the year. You also have investor Warren Buffett coming in, upping his stake even on days of relative strength in both Chevron and Occidental. This space has been absolutely fascinating to watch for the last 12 months.
Yeah, and this is the other upvote, Jenny, because it ties into that core theme. The core theme of 2022 is inflation. Where is that most expressed? In things like commodities and in places like retailers that are trying to manage costs, and we as consumers are trying to manage our expenses. And so when I look at the energy space, it's not, of course, only limited to crude oil. We oftentimes associate that, but natural gas as well, exploding higher throughout the year. You talked about the geopolitical tensions overseas with Russia and Ukraine. Of course, that escalation is really the cornerstone moment, I would say, of 2022, when this really got to a fever pitch in terms of uncertainty of pricing with energy. But it's really been a story that, while it may have been front-loaded to early in the year, it's never really gone away. And so, to me, this is one of the most deserving investing themes of the year. And ironically, too, kind of the only good performing area of the market. And for that reason, too, I think it's interesting and one that we should highlight. So looking forward to talking more about the energy sector with Rick. And then finally, it has to be mentioned, this could for many be the number one as well. The crypto, I don't want to say collapse, but it's sort of been that.
Oh, it's been a collapse, and I'm being more blunt because it has been not only the collapse of this year, but the collapse from 2021. We saw Bitcoin's high this year touch around 48,000, but recall Bitcoin traded almost as high as 70,000 the year prior, and it's been more of a slow and steady decline from November of 2021. Now, we began taking on more serious losses then into this summer when we saw some relative strength, but then, of course, the true catalyst, it feels like, at least as of late, has been FTX filing for bankruptcy in November, as we saw some people come in saying this was one of the worst scandals really throughout the market or throughout the crypto place in so long. Actually, Caribbean Blockchain Alliance president said this was a watershed moment for crypto, and that worst days may still be ahead for the entire digital asset space. FTX's founder, Sam Bankman-Fried, is now in custody and accused by the U.S. of building a house of cards on a foundation of deception, which was their words. So no wonder we've seen so much weakness in related to all things crypto-related assets, also names like Coinbase, Marathon Digital. I mean, the space, it just goes on and on. So to contrast, talking energy as one of the strongest spaces of the year, this has undoubtedly been one of the weakest.
And it does kind of tie in a way, kind of a connected way to inflation. As investors, as consumers, as we become more choosy with the dollars that we have, it comes to a place like this. One, it's underperformed, but also trust has in many ways been broken and the integrity is in question right now in digital assets. So there's not really much more to explore here. I think you did a good job of kind of highlighting the widely reported concerns with this space right now, but a name that is so much tied to the next generation of investors, a space that is still so revolutionary in many ways. I'm excited for what unfolds in the future, but there's certainly question marks here, Jenny, and for that reason I'm going to say downvote. But a story that is very much maybe only in its early stages and possibly brighter days ahead. Possibly colder weather as well. So only time will tell. Excited to talk retail, excited to talk energy.